Good evening, and welcome to another episode of the weekly market wrap. This could be the last uh, series for 2025. I won't be doing another one on 28 because I have an event on 27. I hope you guys can actively participate. And anyway, uh, like I said, this will be the last weekly market wrap for 2025. Today, of course, is December 21st, 2025, and let's get started. Now, before we get into the content itself, I want to remind you that this presentation is not an offer to buy or sell any kind of securities, be it futures, FX, options, CFDs, or even cryptocurrencies. And the trading of any kind of margin products do carry the element of risk. Do understand your own risk profile before you attempt to trade any kind of margin financial products. And I'll be sharing with you my views on the various markets and do understand those are my views and has got nothing to do with investment advice and no responsibility will be accepted whatsoever. And this content has not been vetted by any regulatory authority. And if you're okay with that, let's get started. Now, the week itself, this week is actually centered on the Bank of Japan. We, of course, will be getting updates on the delayed labor reports, but later on when we get to it, I will give you my 2 cents worth. So we knew that Bitcoin has been falling, and it has been falling rather dramatically. We can see that the share price of this company called Strategy, used to be called MicroStrategy, has actually been falling in tandem with the price of the Bitcoin. So much so that there are rumors circulating in the marketplace that at some point Strategy may be forced to sell their holdings of Bitcoin or to sell their shares. And of course, the latest is that they are talking to JP Morgans about some kind of collaboration, hoping to shore up their finances. But at the rate we are going, we can see that strategy share prices are already negative relative to their holdings of Bitcoin, as much as $10 billion underwater. Okay, so if this trend of Bitcoin continue to fall, strategy would be in serious trouble because investors will be definitely looking to dump their stocks. So keep an eye out for this development here. Bitcoin has actually rebounded somewhat going into the weekend, but again, we can see that the recovery is very tentative. Okay. Then the first set of number that came up this past week, has been the labor report. We can see that non-farm payroll, this is October. This is definitely not a good number because nobody knew what was the actual number. It came in negative 105,000 jobs were lost. So this is definitely not a good development. However, in November, they revised up to 64% up, 64,000 up. Okay, you can see that the previous number for November, for October was 35,000 when we knew that it was down 105,000. So not sure how to reconcile it because there has been a little bit of a what you call it, there's a lot of data that were missing. Okay, so nobody put a lot of importance into this number because everybody knew they were making up numbers as we go along. Okay, so the 64,000 jobs creation, you can take it as a good development, but it is definitely on the low end if you use historical data to actually take a measurement. Unemployment rate, however, is not good. It's up 4.6%, the highest we have ever seen. So we can see that 4.6% is definitely a very, very, very high number. And obviously, the Federal Reserve will have to take that into consideration as to whether to continue the rate hike, the rate cuts. Okay, so 4.6% is definitely a bad number going into 2026. Okay, however, the non-farm payroll number of jobs creation is actually a bit of a mystery because nobody really know if this data uh, can be believed. Okay, so this is something that we will have to consider going forward because the BLS, what you call it, the Bureau of Labor Statistics numbers has been put into question this week, especially when it comes to the CPI numbers, which is also coming up from them. Okay, so the job numbers has some troubling news. We knew that the economy shattered 105,000 jobs in October and then rebound back to 64,000 in November. This is definitely going to be contested by a lot of analysts and economists because it does not make sense. And also, we are looking to see if the level in which we are seeing here is definitely something that we can actually take to the bank. Okay, so the unemployment rate is definitely the issue here because it's at 4.6%, the highest we have ever seen since 2009. So this is definitely a concern going forward if unemployment continue to spike higher. Definitely it goes to show that the US economy is definitely not doing very, very well. Okay. Here we have the average hourly earnings. Again, we are not sure whether this is a number that we can believe because we can see October was delayed. There was no real figure until this past week, and this number is again everybody guess is that it is a little bit unreal because nobody knows what is the real situation because there's no collection of numbers in October. Remember, there is a 43 days government shutdown and no data were collected. So this number is at best suspect. Okay, for November, we can see that the hourly earnings for month over month is definitely down from 0.4 to 0.1, and the year over year numbers for November, this is not October, it's for November, also slide from 3.7 to 3.5. Everything is telling us the economy is not doing well. So going forward to the Federal Reserve continue to cut interest rates going to 2026. We are not sure how much a rate cut will happen, especially when we go into 2026, knowing that the Fed chairman's term ends on May 2026, whether the replacement that President Trump is going to nominate will be somebody that will be leaning towards the White House narrative. If that's the case, then that would be problematic because these numbers are definitely skewed towards supporting the narrative from the White House. Here we have retail sales. Retail sales is bad. We can see that retail sales for month over month is at zero, practically no growth. Previous month for, again, this October number is again suspect because there's no data collection. And for the control group is actually bouncing back from negative 0.1 to 0.8 positive. Again, not sure what is the relevance here because October there was no data collection. Simply put, okay. So nobody put a lot of premium into the October number, okay. Now this is the retail sales unexpectedly remain unchanged. So this is telling us that whoever is reporting this set of number for October, November is definitely trying to paint a picture that economy is okay and is very much in line with the White House narrative. Okay, so again, we are beginning to see a trend in which uh, data sets, statistics are uh, more and more in line with whatever the government of the day wants it to be. Okay, so the neutrality of the data set, whether we can believe those data is coming into questions. Okay, personally, I think there's a big problem with all this data that we have been seeing. Okay. Then we have the manufacturing and the services sector from the S&P Global. We can see that as far as services is concerned, now services has always been the bulk hit of the US economy. Even that is showing a little bit of slowdown. And of course, manufacturing has always been the laggard. You can see that although it is positive, but it is coming off from 52.2 to 51.8 for the month of November. And this is definitely not a good number going forward. So everything that we have seen so far this past week has been telling us that the US economy is in trouble. Now, this is a number that I have big problem with. Okay, the CPI numbers, uh, they have practically make up this number. Okay, because like I said, October there was no data collection, and they simply come out with a number to fill in the blank. Okay, so when they tell us that CPI number is not serious, in fact, we can see that CPI has been falling lower. Okay, and that is telling me that again it is trying to fit the narrative from the White House. So a lot of economists and a lot of analysts are questioning the reliability of the September for the latest CPI numbers. Even I feel that the number here is not real. Okay, so the market did not react, okay, in any big way. I think that the market understand that this is not a real data set. Okay, so we will have to watch for November, look for the December numbers coming up in January. So that will be the first time we will be seeing some real numbers. Hopefully, we get to see some real numbers. Okay, so Bank of Japan, this has been the highlight for the week. Bank of Japan was largely expected to hike interest rate by 0.25, which they did. Okay, we can see that they have held the interest rate at 0.5 for a very long time, and inflation is coming back up, and they are forced to actually hike interest rate by 0.25 to 0.75. Going into January next year, there is expectation that they will hike another 0.25%. So that has already affected not only the currency in terms of Japanese yen. We saw that the JGB's yield has also been climbing. So that will be a big concern going forward, because if JGB yields continue to rise higher, just when the rest of the major central bank has end their rate cut cycle, with the exception of the United States, then US is cutting interest rates. And then here we have Bank of Japan cutting interest rates. So we have a divergence in monetary policies, and this would largely impact the yen carry trade. So instead of the yen getting stronger, okay, right after the rate cut on Friday, we saw that the yen actually lost ground. So that is a little bit unnatural, because when you see a central bank high interest rates, that currency should actually rise. But here we have the Japanese yen continue to fall relative to all the principal currency, in particularly the dollar versus the yen. So this is something we really, really must keep attention on going into 2026. So this is the news that came in, and Donald Trump has actually imposed an embargo. Okay, basically a total blockage of uh, Venezuela. Okay, they have, first of all, they have sealed the airspace above Venezuela. Now they start to seize oil tankers coming out from Venezuela. So the last that I saw, there were two oil tankers, and they were heading towards China. So China has not reacted yet, okay, but I'm sure at some point they will have something to say about this. So it's all about the oil. Forget about all these excuses about targeting the cartel, the drugs trade. So definitely it's for the oil. And then Trump's even went as far as say that Venezuela has stolen their oil. This is a little bit ridiculous, because the oil has always been Venezuela's. Okay, so at the end of the day, we can see that what Trump is doing is definitely going for the Venezuelan oil. After all, I've said previously, the oil that the US produces is a light sweet crude, okay, which is not ideal for their own refinery. The American refineries cannot process the light sweet crude. They need the heavy sour crude, which Venezuela does produce. Okay, so now in order to feed their own refinery, they need to get their hands on the oil from Venezuela. Okay, so that's the one thing that we will be watching, and that has caused oil prices to actually rebound, okay, going into the weekend. So this is the Venezuela news. We can see that they have intercepted one tanker, but the last I checked just hours ago, a second tanker was actually seized in international water, and both tankers belong to China. We knew China has been investing quite a fair bit into Venezuela oil production, okay, and they have gone into full-scale production. So if those oils cannot be sent out, uh, then that will be a problem for China, because they have invested billions of dollars into the oil refinery, the oil field in Venezuela. Okay, so sooner or later, China is going to make a statement as to whether they will send any kind of military ships to actually safeguard the tankers. We do not know. Okay, but it is a event that we want to watch. Now, going into the Christmas week, we can see that the calendar is actually very, very light. As far as US is concerned, we have the annualized GDP numbers for Q3. No estimates here. Last, it was 3.8%. So I don't think that will be moving the market in any big way. Okay, so that could actually conclude the actual the year itself. Of course, we have a few more days before the year end after this coming week, but again, it is towards the tail end. Now, I like I said earlier on, 28, which is going to be the last Sunday for 2025 in December, I will not be doing the weekly market wrap. In fact, there will be a cessation of this weekly market wrap. This will be the last one. Like I said previously, there were some regulation that says that people like me who talk about markets must be regulated. At least we cannot be offering it for to the public. So it has to be a closed event. Okay. So before we go there, I want to remind you that I'll be doing a talk on the 27th, which is on Saturday, 7 to 9 p.m. And this is a paid event. So if you're interested to know what's my view for Q1 2026, and you can see the graphic that I have actually chosen is going to be less than friendly. Okay, so there's a lot of things that can happen in 2026, and personally thinking that it will be a very dramatic 2026. So if you want to hear my view, you are more than happy. I'll be more than happy to see you in this event here. And if you are interested, this one you would have to do a payment via Pay Now. There is those details over there, or you can contact this WhatsApp number 90998999. Okay, so once you make payment, they will give you the Zoom link to this event. And remember, this is for Saturday, December 26th, 7 to 9 p.m. And this is an event that is $180, but if you can commit before 23rd, okay, it will be $99. So for those who want to take advantage of this early bird, it's $99 if you make payment by before 23rd, which is going to be Tuesday. All right, so let's get going. I want to show you the stop sharing. I'll be sharing with you. So as usual, I will start off with the Dow Jones. Okay, I see that there's a couple of questions here. Let me refer to those questions. Bak Xiong is asking, why did the yen tank against most currency when BOJ rate hikes on Friday? Okay, if you have been following the news, it seems that there's no clarity. You see, because this rate hike has been largely expected, so the market did not react because it's already expected. In fact, there is this possibility of buying the rumor, selling the fact. Once a rate hike comes in exactly as expected, okay, which is very common in financial markets, the question everybody wants to ask is when is the next one and by how much? So the whole world want to know what's coming up next, and they will react to what they think may be coming up next. And because there's no clarity as to the timeline as to when the BOJ will be hiking interest rate again and by how much, the market did not react very positively. In fact, the market started to sell the yen against all principal currency. So that is the only reason why the yen has been falling right after the Bank of Japan's hike interest rates, because they need clarity. Uh, we have seen this so many times during the 2010 European debt crisis when Greece defaulted practically. Okay, everybody's asking who is going to be the next nation within the EU that will default. Okay, it's always the same story whereby investors want to know who is next, what's next, and if they don't get clarity or they don't get confirmation of what's coming up next, then that will be a problem. Just like United States, the Federal Reserve said, okay, they cut rates 3 times in 2025. The big question is January, will they cut rates again and by how much? And if they're going to be cutting interest rates the whole of 2026, how many cuts can the market expect? Okay, there is no clarity there. So we can see that the dollar has actually come off, very much in line with expectation that there will be more rate cuts going forward because the market simply doesn't know. So when the market doesn't know, they speculate. Okay, so this is a reaction which is very normal and usually seen in financial markets when they have no clear answer. So as far as we can see, this is the uh, charts for the Dow Jones. Dow Jones actually created a high for this month. You can see that the high traded was 48,884.84. So this is a brand new high for the Dow Jones. Okay, it did not happen in the other major equity index. So this is the outlier here. Okay, so when we see that the US equity market is not moving in sync, meaning to say that the other equity markets did not register something similar like a brand new high, then that calls into question. We can see that the market by and large wants to go higher, okay, because the momentum is still there. But I think over the last few weeks, we are beginning to get some idea, especially the data set that we saw this past week, has been suggesting the US economy is in trouble. Okay. And if you believe that is the case, then of course the equity market will have to react. Okay. So won't be surprised if next year, in the first quarter of next year, we can see equity markets falling back down to earth. Okay. Because there has not been confirmation. This past week, we did not get a new high in the Dow Jones. We have a new high the week before. So we can see this week the market end as an inside bar. Now, inside bar could possibly end up to be a continuation pattern, or it could be a potential reversal pattern. So it all depends on how the market closes this week. If the market closes this week on a weekend, okay, meaning to say it closes lower, especially closes lower than the previous week low at 47,466, then it could set the conditions for profit taking going into the year and perhaps into the first few weeks of 2026. Okay. So the condition for a pullback is actually there already. So in the daily time frame, we can see daily time frame, we're beginning to see, although the market managed to register a fresh all-time high the week before, this week itself there is that little bit of profit taking going on because there is no follow through pushing into brand new highs for the other equity index. So this is something that we would have to take into consideration when you are looking into these markets here. Okay. So there is a little bit of a counter trend in place. Uh, so when you go into the S&P 500, do we see something similar? So this is the monthly time frame for the S&P 500. We have a challenge of the all-time high. So far, it's a 6,925 thereabout. This past week, we have a challenge, but not quite what we call a half-hearted challenge. The high traded was 6,924.29. Okay, so it was half-hearted. Previous week, we can see that there was no brand new high. This high was traded, this all-time high was traded in the second week of December. Okay, and we can see that this is how we are seeing here. There was a long-legged shadow doji followed by another doji. So the market is unsure where to take the market as far as the S&P 500 is concerned. So this is the weekly time frame. We have a little bit of a counter trend with a half-hearted rebound. The market did not go as high as to take out the previous high here. Okay, that you only managed to do it at 6,924.29. So it was not a full-hearted attempt to challenge the all-time high. So we have the counter trend already in place in the S&P 500. In the daily time frame, we can see that this is definitely very clear cut. We have a three-wave pullback followed by another bounce. Now, this could be part of a larger degree three-wave that suggests that we may be seeing another attempt to trade below the most recent low. Okay, if I'm right, there is the possibility of the market challenging 6,508. 100% AB equal to CD. Okay, let me change this a little bit, change it to equality. So if this is equality, there's a possibility that going into the new week, we could see further losses in the S&P 500. Okay, targeting perhaps the 6,507 and a half. That's marginally below the most recent low at 6,508.22. That could be one possibility here. Okay, so far it is just a possibility of a pullback. No sign that it is about to unravel to become something that will reverse the entire bullish trend. In the Nasdaq 100, we can see that the market is no longer led by the Nasdaq. This is the weekly time frame. You can see weekly time frame has already been seeing a bit of consolidation, and this week we have been trading the lower end of this consolidation. Going forward, there's a possibility the market will go below this most recent swing low here, targeting 24,700. So again, very much in line with the S&P 500. The daily time frame also suggests that we may be seeing a three-wave pullback, 24,700 at the minimum. Okay, so the market has no incentive to take it to brand to fresh all-time high because there's no important data coming up other than the Q3 GDP numbers. Unless that numbers is very far from estimates. Currently, market expecting 3.8%. Unless it come out to be way better than, let's say, 4.44% and above, then the market may react. Or worst case, the market come out less than 3.8, then of course the market will continue to trade lower. So this is the outlook for US equity market. I think the market is about here and it's likely to close around current price. Okay, it's not going to, there's no incentive to take it either way. So when we look into the Europe itself, we can see this is the DAX, which is the weekly time frame. It is also going to consolidation. The market has been in consolidation mode since May of this year. So it has been like this for more than 6 months now, and there is no real incentive. Going forward, 2026, I do expect a war to break out in the whole of Europe, and that could be something that to watch going forward. Okay, daily time frame, we can see that the market has been in very large consolidation mode, anywhere between 24,800 to 22,900. So this is a broad band. And if this is the case, we have three-way pullback followed by a rebound which failed to take out the 24,515. There is that possibility of further losses. Okay. I'm of the opinion that we probably will see further losses. Yeah. To challenge this low one more time, 22,600. Okay. So this is the German index. Let's take a look at the FTSE, which is the UK index. Now, this is the weekly time frame. We can see that there was a rally attempt, but not quite enough to take out the all-time high at 9,939.7. Okay, there's a very robust rally going on in UK. Not sure what is the reason because the UK economy is just as bad compared to, let's say, Germany or even France. Okay, here we can see that it is part of a possible three-wave pullback. If that's the case, then there's a good chance it will retest this swing low here, perhaps at 9,400. Okay, so nothing much exciting is happening in equity markets as far as we can see. Now, the rate hike by the Bank of Japan, has it caused the Nikkei market to actually improve? It has improved a little bit, okay? Because what happens in Japan, there's a bit of a conflict because the inflation is serious. Okay, based on historical level, we can see that inflation is becoming an issue in Japan. And then we saw that there was sharp revision in the GDP numbers. So we have a situation in which inflation is still a big problem in Japan, and then the economy is obviously slowing down. To high interest rate when the economy is slowing down is a recipe for trouble ahead. Okay, and what we do see is the international players, are they too concerned about the rate hikes? I think they are, okay, because of the yen carry trade. If the yen gets stronger, and then the interest rates of servicing the yen loan become more expensive, which it is right now, then there will be no incentive to hold on to the yen loan. If I am somebody who borrowed the yen to reinvest somewhere else, I will be incentivized to actually pay down my yen loan now that the yen interest rate is going up. So eventually, I think there will be cascade of people unwinding the yen carry trade, and that will mean that if the dollar versus the yen comes down, which is the yen getting stronger, I think that could be a case because the Japanese central bank is on the path to high interest rates. Although they are not very clear as to when the next rate hike will be, a lot of people was already speculating that January they will hike another 25 basis points. Okay, so that should put the yen in a stronger footing. Okay, purely because there are expectation of more interest rate hikes. May is asking, in my opinion, will further rate cuts be able to push U.S. market higher even if data shows the economy is weakening? Now, a lot of people link lower interest rates to be a positive development in equity market. It is widely accepted that is to be the case, okay? Because if the cost of capital go down and more people will be able to access cheaper loan and that could find its way into the equity markets. But we have seen in recent years, okay, when the interest rate was hiked. Now remember during the COVID period, right after COVID, interest rate was going up, but the stock market didn't go down. So the stock market can actually also rise on the back of rising interest rates. So there is no what call it? It's just not a case whereby if interest rate goes down, it will automatically be ideal for equity markets, except the small cap. we can see that this round, we can see that the Russell 2000 has actually benefited a lot more compared to, let's say, the Dow, the S&P 500, even the Nasdaq 100. So a lower interest rate will definitely be more positive for the small cap. Okay, so there is no evidence to say that lower interest rate will definitely cause a rally in US equity markets. But having said that, there is that momentum behind the bull market. This 16 years bull run, starting from March of 2009, is still very much alive. Okay, so do not recommend selling just yet. There will be a time to sell the US equity markets, but from what we can see so far, technically, there is no reason to do so. Okay, there will come a time, perhaps somewhere in Q1. Okay. Now, another question here is why Japan increased interest rates, but the currency is not appreciated as we see in the last carry trade. How about this time? Will it be similar or should it appreciate? Now, a lot of people, I just explained, right? So, market participants, especially speculators, they want to know what's next because this rate hike has been largely expected. The whole world know they are going to hike interest rates. So the market would have moved towards the eventuality. So once it actually happens, there is no incentive to continue to buy the dollar yen unless they know for sure that there will be more rate hikes coming. Okay, so the market doesn't know because there's no official language to suggest that there will be rate hikes in the next few months. So the market doesn't know, so the market took profit. So this is something that is very hard for people who start to get into position after the news because the market has this tendency to move towards the price uh, for the eventuality. Like I said, this is not a secret. The whole world knows the Bank of Japan will be hiking interest rates for weeks. Okay, the dollar, the yen has been strengthening. Okay, so they have already moved to that expectation of a 25 basis rate hike. So when it actually came out and become a reality, those people who have been long yen has no more incentive to hold on to the yen unless they know what else is coming. Okay, so that is the reason why the yen has actually weakened after the rate hikes. Okay, so this is how we are looking at Japan. However, when we look into Hong Kong, Hong Kong seems to be doing fairly well, although it is in a bit of a consolidation. The high traded in the Hang Seng is at 27,424. Okay, so we can see that the market has dropped down quite dramatically to 25,000 thereabout. So this could be the trading range going forward. As we can see, it's very much in line with what we are seeing in the other major equity index. The market is in consolidation. If this is a three-way pullback, it will probably challenge this low here at 24,950. Okay, we have a target at 24,700. So there is a possibility of a pullback, but pullback means the overall trend has not changed. It is still very bullish. Hong Kong in the daily time frame obviously is in consolidation. It has been in consolidation since September of this year. Okay, but by and large, the bullish trend remains very much in play. So do not try to sell the Hang Seng, or in fact, do not try to sell any kind of equity index right now, simply because there is no signal to say that the bull run is over. Okay, in fact, I have reason to believe that we could still see new high going forward. Although I'm not so sure about beyond Q1. Okay, here we have equity markets, and let's go into the currencies. The dollar index has been coming off a little bit, but it has bounced off its low. We can see that this is a dollar index, which is a basket of currency for US major trading partner. You can see that the low is 96.16, rebound to 100.39, but it has been losing ground, largely because the world expect the Federal Reserve to continue rate cuts. Okay, so that will be weakening the dollar going forward. But I suspect that we may have already seen the low in the dollar going forward. This 96.16 could, for all I know, be the low. Although there is a possibility of a marginal low, because this is a three wave, and if it's equality, it should go down lower to 94.7. Okay, but what happened since the 96.16 is that there has been a bullish reversal here. So that lead me to believe that maybe before the market goes down again, it will probably try to go higher. So if this is the case, there is the possibility of a three-way bound higher, like this, towards 102. Okay, if that's the case, then there is a possibility of further gain ahead. In the daily time frame, we can see that the dollar has already have a counter trend from here, from the low of 96.16. The market did break the the support line. Now, if it goes back up again, it could be trading anywhere near the 101 levels. Because the longer it takes to happen, the longer it may. This line here that we see, the black color line, the support now could be turning to be a resistance. So going forward, a 101 in the dollar index is quite a real possibility. So if the dollar is coming down, it means the other currencies should be going higher. However, we are seeing a little bit of softness in the principal currency. Here we have, not this one. I'll show you the euro versus dollar. This is the euro versus the dollar. Okay, we can see that the high is 119.19 in the weekly time frame for the euro versus the dollar. We can see a bit of a softness going forward, and this is unlike the dollar index, which has yet to hit its equality level at 94. Okay, here we can see that this three-wave rebound here has hit equality exactly. Okay, almost exactly. The high target here is 1.1917. Hit 1.1919. So it's as good as hit the target equality move. So if that's the case, people will start to reposition themselves. I've already taken up a short position, thinking that market will come off, especially going to 2026. I think what we are seeing in Europe is definitely not very positive. Okay, we can see that they have pushed through a loan for Ukraine. That's about 90,000 euro, 90 billion euro dollars. Okay. And they did not manage to seize Russian assets to pay for this. Okay. They actually took a loan with the Russian frozen asset as collateral. Okay. So it's not the same. Okay. So here is that if Ukraine don't win the war, because they're hoping that by the end of the war, Russia will start to pay repatriation. Okay, but if Russia wins the war, then Russia do not need to pay reparation. Okay, so who is going to pay for that loan? At the end of the day, I think the EU will have to eat that loan, 90 billion euro dollars. Okay, to be spread out among all the members of the European Union. Here we can see that daily time frame, we have a bit of a potential three wave. Okay, we have a bounce up to 119, sorry, 118. And if this is the case, I think there's a possibility of market going lower below 114, coming towards 113. Okay, 113, I think is where the market could be heading to. Okay, I've already sold some, although the price continues to go higher, but I intend to keep it straight. When we look into the sterling, sterling have somewhat of a similar pattern. Okay, here we look into the weekly here. You can see that the market did not quite have an equality move, but a high traded at 137,890. Looks like peaks about the same time as the euro versus the dollar. Here we have a three-way pullback. The market attempt to rally, but I think the rally attempt is actually quite half-hearted here. I don't think there's any real momentum behind it. In the daily time frame, we can see that this is part of a larger degree three-way hit equality at 1.3080. We have a low here at 130.10. Okay, so it has hit its target, and if everything is right, then we should be seeing higher prices. But again, I do see the dollar actually holding its own going into year end. I don't expect the dollar to continue to go lower because euro dollar has hit its target in a three-wave corrective pattern. Now, when we go into dollar yen, this is going to be the interesting one. The dollar has been weakening. I mean, the yen has been weakening. Sorry. Okay. Here we can see that the market high is 162. This is also when the Bank of Japan came in to intervene. Okay. And the market trended to as low as 139.60 before it bounced. So here we don't see an equality move. Okay. Now, this month itself, we saw Bank of Japan high interest rates. It should actually cause dollar yen to come down, but it did not for the reason I just cited. Okay, so technically speaking, the dollar want to go higher. So can it go higher? I think it may try to go higher, but over the medium to long term, I think the dollar yen will have to come down. Okay, because it makes no sense for the dollar versus the yen to be so strong. Here we can see the dollar yen on the weekly time frame is telling us that what we are seeing on the monthly time frame is very much stay in place. The market took out a resistance level, trading above that for more than a month now. So that could be the area of support, at least for the medium term. Okay. Now, in terms of closing prices, the dollar yen has closed on a high note. Okay. Based on closing price alone, this is the highest it ever closed. Daily time frame is this late move here on Friday, remember the Bank of Japan's high interest rate on Friday? So the reaction on Friday was actually to take the dollar higher, which is anti-climax because the whole world expect the dollar to be trading lower. So technically speaking, this one looks like it has momentum. Okay. So tomorrow or the next few days, okay, before Christmas, I won't be surprised if dollar have take out 159, 158, sorry. Okay. So because this bar here shows that on Friday there is serious momentum behind this rally here. Right. All right. Some of you may want to know what is Aussie looking at. I believe some of you are trading Aussie. So this is a weekly time frame for the Aussie. The Aussie is really not going anywhere. After the bounce from 59 cents, it went up to a high of 67 cents, and it has been stuck in limbo within a very narrow trading range. So nothing is excitingly happened, but because the Aussie is a commodity currencies, we all know that gold prices has been going higher, so it actually underpinned the Aussie dollars in certain ways. Okay, so right now the Aussie versus the dollar is trading a little bit elevated purely because it's a commodity currencies. Later on, I'm going to show you the dollar versus Canadian. You will see the same thing. Commodity currencies are getting stronger relative to the dollar. Okay, so this is the outlook. Let me show you the dollar versus Canadian. Yeah, here we go. You can see on the weekly time frame, the dollar has been coming down relative to the Canadian dollars. And this has largely to do with the fact that commodity prices could be looking up. Okay, so from copper to grains to coffee, we can see that commodity prices are coming back up. So commodity currencies should benefit from the higher values in commodities. So this is a reflection of the commodity trade. Here we can see that the daily time frame overall, there is a possibility we are beginning to see what appears to be a potential five wave. So if this is a five wave, another low below 135 is almost a sure thing, right? So there is on this side here, there's 134.20, and the target is at 133.80. Okay, so either of this could be a target going forward. So the dollar is falling, but against the commodity currencies. There's a question here. Let me see what is the question. Okay, if Japan carry trade might happen again in 2026, this might move the Japanese equity further in the futures. It all depends, okay? When when the Bank of Japan says they are no longer interested to buy the JGB, which is the Japanese government bond, you see, when the yen carry trade, it's a three-legged animal. Okay, on one hand we have the yen, the other one is interest rates, and of course the other one is the JGB. Okay, so if the Bank of Japan high interest rates, the yen should appreciate. So will international investors borrow more yen, knowing that the interest rate is going to go higher? No, that will not be the case. Okay. However, the Bank of Japan has already said, because currently the Bank of Japan holds about 52% of all JGBs, okay, which is the Japanese government bonds. They have already said they will stop buying. So if the Bank of Japan don't buy the government issue bonds, who will be buying? So there is a big question of JGBs has no buyer. That is the reason why we can see the JGB yields for the 30 years, for the 10 years, for 30 years, and 40 years, they are all at highs that we have never seen, okay, for the last 30 years. So we can see that the yield in the JGB has been climbing because there is simply no buyer for the JGBs. So if they cannot find buyers for the JGBs, it will be problematic for the Takeichi government to actually launch stimulus package. They already said they want to borrow $132 billion to stimulate the Japanese economy. Where are they going to find the money? Short of selling U.S. Treasury, okay, which will not be looked upon highly by the U.S. Treasury. So the only solution is to sell more Japanese bonds, take the money to stimulate the economy. Now they have a big problem because nobody wants to buy the Japanese bonds. Okay, so it's a bit of a conflict. Earlier on, I did mention that just when the GDP is shrinking, you hike interest rate, it goes against every rule book, okay, for central banking. Because if you want to save the economy, you don't do it when the economy is weak, when you are starting to hike interest rates. In fact, you should be cutting interest rate, not hiking. Okay. So that is the dilemma for policymakers in Japan. Okay. All right, let's move into gold. Now, gold has rebounded. This week itself, we saw gold attempting to trade higher. Okay, there was a half-hearted attempt to take the gold higher beyond the all-time high. In the futures market, there was a fresh new high. But in the spot market, we find that the high has not been exceeded yet. The high in the spot market for gold is at 4,381.37. The highest traded this past week is 4,374.5. So it did not quite take out the all-time high, but in the futures contract, a new high was registered. Okay, so there is still the shortage in the gold market. A lot of people are saying that it's time for gold to actually correct. It may happen, it may not happen, but even if it happens, it is lower to buy. Okay, assuming it does happen, we have a three-way pullback, then the market will go back and try this lower more time. That's it. And then market after finishing the three-way pullback, it's still going to go into new high. Right? So this time is different because the rise in metal prices is structural in nature. It is not some speculator trying to corner the market. This one is real because there is shortage of gold and central banks are buying. And central banks are immune to COMEX raising in the margin rates. Now, if you have any memories, you read some literature on the silver uh, manipulation back in the 1930s when the Han brothers tried to corner the silver market. They buy up all the mines and they will heavily long the futures contract in COMEX. Uh, the exchange managed to change the rule of the game by rate by, by stipulating that they can only sell, cannot buy. Okay, the whole world can only sell, cannot buy. That means to say that the bull market stopped on its track, and then they raised the margin requirement substantially to the point whereby the Han brothers have to liquidate their position, which led to a massive collapse in silver prices. This time they cannot pull out the same trick. Okay, they can impose condition whereby people can only sell, cannot buy. Will it cause the price of silver to come off? Yes, instinctively it will cause silver prices to come off, or in fact, precious metal prices come off. Okay. However, this time is structure. There's seriously not enough silver to go around. Okay. So it is a structural problem. So just because the exchange has the right to change the rule of engagement by raising the margin requirement or instituting what we call Rule 7, in which you can only sell, cannot buy. Yes, it worked the last time, almost 90 years ago, but it will not work this time because this time is the industrial player are buying silver. Okay. If you have read the news about Samsung SDI, which is the arm of Samsung dealing with batteries, they have come up with a new technology that works even better than lithium. But the problem is that they need a lot of silver. And they have basically financed a silver mine in South America, and they take 100% or whatever they could mine. So everybody is going direct to the mine to buy. Okay, so that tells us that the structural problem in metals is for real. Okay, so no amount of margin requirement tweeting and imposing rule 7 is going to work this time. Yes, there could be some kind of knee-jerk reaction, but I think this time the bull market in metals are real. It can go a lot higher. Okay, okay, there's another question here. Let me get this question here. uh Sasa. In contrast with Swiss, the increased interest rate has moved the equity market higher, and Swiss franc is appreciating ever since the rate hike. If this compared to Japan, this is more makes sense as compared to Japan. Now, the Swiss National Bank do not like the fact that people are buying the Swiss franc. So the Swiss franc is a very small currency. Okay, and definitely they do not want the Swiss franc to be stronger than their export market, because the Swiss export a lot of high-tech equipment, especially medical equipment. So if they have to compete in the marketplace, having a strong currency does not help them. Yes, people find safety in Switzerland, but Switzerland is no longer neutral. Ever since the start of the war in Ukraine, Switzerland has already broken the trust when they agree to cease the Russian oligarchs' money, they are parked in Swiss bank account. A lot of other tycoons move their money elsewhere. The Arabs have moved their funds elsewhere. Okay, Singapore is a beneficiary of that because they feel that the Swiss is no longer neutral. Okay, so having a strong currency is definitely not something that they wish to have. Dennis is asking, is silver price still good to buy for long term? I would say yes. Okay, but again, we have to watch the price chart here. Okay, now we go into silver market. Now, this is silver on the weekly time frame, which is a record high. Okay, 67,044 cents. Okay, this could be, if I'm right, okay, possibly near an end to a very impulsive move here. Could there be follow through buying? I will not say no. Okay, but the market has hit a Fibonacci extension level. Okay, so anything beyond here, it will be bonus. The market has a risk of pulling back. If there's going to be a pullback, the market can pull back as deep as $45.50. But this is a long-term buy. Okay, so while you are long, you want to protect your long position. Here I have two long positions. I'm protecting my stop at the entry price in the second entry here, just in case the market pullback. But so far, we look at the prices, the consolidation is actually very, very brief. This week itself, you can see how market broke into fresh all-time high. So basing on the momentum that we see on the daily time frame, it looks like silver may not pull back immediately. Okay, at least there's no technical sign that it will. Okay, so the next target for me will be $72. There is a range in the futures market between $66 to $68 per ounce. If the market can close above $68, it will set the stage for $72. Okay, long term, there are already people speculating about $100 per ounce in silver. So if you ask me, is it still worth buying? I would say uh, we are not seeing the top yet. Okay, if there's going to be a pullback, it will be a buying opportunity. Okay, that's all I can say. Right, silver is already done. I want to show you the oil. Now, when Trump imposed a embargo on Venezuela and they start to seize tankers, and those tankers belong to China, okay, that is asking for trouble. We can see that the lowest traded was $54.98, a fresh new low compared to what we saw at $55.20. So this is actually, I would think, okay, the market still, based on this structure here, there is the possibility of market going further lower. Okay, 130 is a high right after the Russia entered the war in Ukraine. So if this is a three wave, there's a possibility of market going down to $30. Can it go there? I do not know. But based on what's happening in Venezuela, it is definitely a positive for crude oil. Okay, if if the US actually invaded Venezuela, it will cost crude oil prices to rise. So I'm positioning for that. You can see that I'm gone long tentatively. Okay, I want to see if this trade works out to be the trade I'm thinking it will happen. Okay, I am long-term bullish on crude oil, although I do not know where the low is. Okay, there's a possibility of market going down to $30. So if that happens, that would be even better. Okay, so I'm just taking my chances, keeping a very, very tight stop. Okay, daily time frame, you can see this is a daily time frame. The market is not that strong. Okay, there has been a little bit of a turnaround. On Tuesday, the low traded just under $55 per barrel. So we can see that there has been a little bit of buying. So at least people who are short, now based on the new news that we see that US is definitely imposing an embargo on Venezuela, it should directly be bullish for crude oil. Okay, especially if the Chinese react to the seizure of their two oil tankers. So far, the Chinese have been very, very quiet. So if they ever make a statement, it could actually cause oil prices to spike higher. Okay. So anyway, the Chinese has not spoken yet, so we do not know. So now I want to show you Bitcoin. Bitcoin has come off under a lot of pressure. This is the monthly time frame. You can see that Bitcoin has been coming off, traded to as low as 84,000 this past month. Okay, we see a bit of a rebound, but overall we can see that this is part of a corrective pattern. Now, long-term Bitcoin is very bullish. Unless this level at 15,462 is taken up, even if Bitcoin falls to 16,000, it is still a buy. Okay, so I'm waiting for Bitcoin to continue to unravel lower, okay, so that it can give me a much better entry price because the institutions are definitely in. Okay, we can see that Citibank has been encouraging their financial advisors to encourage the client to buy XRP, for example. So basically, we can see that the banks are already in the game. Okay, so if that's been the case, it will create some kind of support and demand for cryptocurrencies. This is Bitcoin on the weekly time frame. We have a bit of a pullback with as low as 80,500. Okay, been the low so far last month. Okay, so will the market go down lower? I hope it does. Okay, because I want to buy at lower prices. In the weekly time frame, this is the level to watch, 48,740. Okay, I don't think it will go down as low, but if it does, that would be a bonus. Okay. The one that you want to watch is MicroStrategy because all focus is on MicroStrategy having to force to sell either their stocks or to sell their holdings of Bitcoin. So that would be a catalyst to watch if MicroStrategy throwing a tower starts to lighten their holdings of Bitcoin, it may actually cause Bitcoin to fall. Okay, but we can see that over the last few weeks, there were reports that as much as $23 billion has been buying Bitcoin, and this is a big amount. If others, money managers has been quietly been buying the dip, it shows that there is demand still for cryptocurrencies. Right? Daily time frame, you can see that the market has come back off and is within this what you call a very deep retracement level, 80,500. This is a level in which I'm watching 74,400. If it doesn't break, I think it will hold and it may cause prices to start to firm up again. Okay, so I'm long-term bullish on crypto. Um, Take a look at Ethereum. You can see Ethereum overall is still bullish. We have a very, very deep sell-off from almost under 5,000 to 2006, almost half. Okay, so the market has stabilized somewhat. Okay, daily time frame, yeah, there's a bit of a counter trend now in place. Three-wave pullback has hit equality at 2,731. The low trader is 2,716. 17. So it has hit target. So if this is the case, then prices should look to recover. And you can see that I'm really long Ethereum, although I'm still a little bit underwater. Okay, but I'm holding on to this trade. Okay, anything else you want me to talk about? Jim is asking if retail investors are interested in investing crypto for long term, which crypto would I recommend? I can't recommend. What uh, I I don't hold crypto. Okay, uh, it's unlike those people who owns crypto. They have a cold wallet. They buy and then they put them in cold. I don't do that. I just simply trade them because they are very tradable. Okay, so whenever I can see on my chart, I will basically take a position. Okay, right now I have only long position in Ethereum, nothing else. Okay, so I can't recommend which which crypto will be the one for you. Okay, anything else? Remember, next week on 28th, there will be no weekly market rep. Instead, on the 27th, there will be a 2 hour talk in which I will talk about Q1 2026. If you need to know what is that QR code, I will show you one more time. So this is the one. So if you're interested, now early birds ends on 23rd of which is on Tuesday. So if you are interested to attend this talk, it costs only $99 for early birds. Okay, this is the pay now account, and then the best is that you reach out to this person on this WhatsApp to let you know to let him know that you have actually made payment. Okay. Okay, guys, thank you very much for your time. I shall see you in 2026, or at the very least next Saturday. All right, thank you very much. I shall see you soon. Bye bye.